Hello friends, how are you? I'm Shranik Bardia. I'm back with another new video on Basel guideline, and in this video we will look at capital requirement for public sector entity and multilateral development bank under standardized approach. And first we will look at claim on non-central government public sector entities. Claim on domestic public sector entity will be risk weighted at national discretion according to either option 1 or option 2 for the claim on the bank, as we have discussed in our previous video. And when option 2 is selected, it is to be applied without the use of preferential treatment for the short-term claim, and this is regardless of the option chosen at national discretion for the claim on bank of that country. And therefore, it does not imply that when one option has been chosen for claim on bank, then same option should also be applied for claim on public sector entity. And subject to the national discretion, claim on certain domestic public sector entity may also be treated as claim on sovereign in whose jurisdiction the public sector entity are established. Where this discretion is exercised, then other national supervisor may also allow their banks to risk weight claim on such public sector entity in the same manner. And if certain conditions related to corporate are satisfied, then risk weight for the public sector entity will be same as risk weight applicable for corporate. And now we will look at claim on multilateral development bank, and here the risk weight applied to the claim on multilateral development bank will generally be based on external credit assessment as set out in the option 2 for the claim on the bank, but without the possibility of using the preferential risk weight as applicable to bank for the short-term claim. And 0% risk weight will be applied to the claim on highly rated multilateral development bank that fulfills certain criteria as provided by the committee. And eligibility criteria for MDB to be risk weighted at 0% are: first, very high quality long-term issuer rating. That is, a majority of MDB's external assessment must be AAA rated. Second, shareholder structure is comprised of significant portion of sovereign with long-term issuer credit assessment of AA- or better, or the majority of MDB's fundraising are in the form of paid-up equity capital. And third, a strong shareholder support demonstrated by the amount of paid-in capital contributed by the shareholder, the amount of further capital the MDB has a right to call to repay their liability, and continued capital contribution and new pledges from the sovereign shareholder. Fourth, adequate level of capital and liquidity. And fifth, strict statutory lending requirement and conservative financial policies, which would include, among other conditions, a structured approval process, internal credit worthiness and concentration limit, large exposure approval by the board or the committee of the board, fixed repayment schedule, effective monitoring of use of the proceeds and status review process, and rigorous assessment of the risk and provisioning for the bad loan. And there are a list of MDBs which are eligible for 0% risk weight, as you can see on the screen. Few among them are International Bank of Restructuring and Development, International Finance Corporation, Multilateral Investment Guarantee Agencies, International Development Association, and Asian Development Bank, African Development Bank, European Bank of Restructuring and Development, and so on. And now here we have come to the end of our video, and I hope this has helped you to understand how capital requirement is calculated for public sector entity and multilateral development bank under standardized approach as per Basel guideline. And if you think this can help others, then please share it with your friends and colleagues. Please subscribe to this channel for more update on Basel guideline, and provide your feedback in the comment section below, which will help us to improve. Thanks for watching, and God bless you all.